Sabah al khair. That's my version of good morning in Arabic. So, what a fascinating time to be discussing together the very relevant changes in the New World Order. And as I was preparing for today, I kept on coming back to the question, what can I possibly tell this audience who's already so well versed in geopolitics and commodities and understanding economics and asset allocation, what they don't already know? And the answer I realized was not to tell you what the world looks like. You see that every day. It is to summarize how we at PGIM strive on a daily basis to connect the forces that are changing the world. How we think about it's not deglobalization, but instead it's reglobalization. How the race for the technological high ground is changing the dynamic patterns not only of growth, but of power. And how the ever-changing forces of power, of energy, of opportunity and risk, how these patterns are helping to shape all of this. And it's all happening very quickly, and it's very relevant and important for us as asset allocators. So let's start with the first of these themes, which is economics, right? We all understand economics very well. So what's clear from this chart is that when we think about advanced economies and the growth there, it's overwhelmingly being driven by the United States. And we know why. It's because of AI CapEx. It's because of fiscal policy, industrial policy, and what's happening with the patterns of consumption in the United States. Europe is slowing. It looks like Japan has stabilized. But it's really the US that's behind the core of advanced economy growth. But it's a different story when we look at emerging market growth. It seems to be a little bit better balanced. We know that China is still very much an anchor to growth in emerging markets, even as they address the rebalancing needs of their economy. But the patterns of growth in emerging markets are supported by their fundamentals. But I also think that what's beyond what we see in the numbers is the dispersion and differentiation in growth. And this dispersion is not a bad thing for investors because in fact, it presents opportunity. And understanding what's behind this dispersion, I think, is even more revealing because that's all about how trade patterns are being rewired, and that's because of the different supply chain dynamics. Gotta click it this way. So trade is not declining, it's just being rebalanced. So the US is importing less from China, but it's importing more from the rest of the world. And what parts of the rest of the world? Well, it's Latin America, it's Asia. And China, it's an export engine. Some say it's having a great trade war. It is exporting less to the United States, but it's exporting a lot to the rest of the world. And why is that? It's these regions have either the stronger demographics or a better cost advantage, or they're of more strategic importance to the different and evolving trade patterns. And this helps us shift to the next dynamic that I think is really relevant to this theme, and that's the evolving role of the US dollar. So to make it clear, the dollar is still the center of the global financial system. It's very relevant for capital flows, and assets are largely still valued in terms of dollar. But there's something else happening. There's something else at play. And I don't think that when we're asked the question, are investors shifting away from the dollar, that it's an easy answer. It's a lot more subtle than that. And I think that maybe how we look at the value of the dollar matters. So we're all usually comfortable and familiar with looking at the with looking at the DXY, sorry. But that just looks at the dollar relative to G3, mainly G3 countries, and it doesn't tell the whole story. If in fact the world is changing, we think a better way to look at the dollar is through the broad real dollar index as determined by the Fed. And this is telling a little bit of a different story. Here we can still see that the dollar is relatively strong even after the recent correction. And we think from a historic perspective, it doesn't seem like investors are deciding they don't want to own dollars en masse. However, there is something that's changing, and in part, we can see this with what's happening with gold prices. And I think that appreciating the fact that perhaps this is more about uncertainty and confidence is a better way to help better appreciate what might be happening as the world shifts and rewires from the different and varying trade patterns. And it really helps us better understand the next force, which is geopolitics. And bear with me, because this topic is a little bit heavy, but I think that it's very relevant. And I often ask myself, when I talk to investors and when I talk among my colleagues, well, is the world simply getting more volatile? Or is it just a matter of it always having been complex, but it's just structurally different now? And those structural forces that are changing we're in an age of intense economic competition. There's fiscal dominance that's playing a large role in how policies are enacted, and that's very much related to industrial policy. We think a lot about energy security, clearly very relevant for this region. So let's start with just discussing some of the factors that are relevant for this intense economic competition. Again, it gets back to wanting to control supply chains, wanting to control natural resources. And it ends up, the end result of this is shifting alliances and shifting trade routes. Next, when we think about what's happening with industrial policy, it makes a lot of sense that countries want to control their own destinies. And in order to do so, they're seeking to control resources. They're seeking to invest in strategic sectors. And they're also endeavoring to forge different alliances, perhaps. What about energy security? I don't have to tell anybody in the room how much that matters. We're sitting here, I think there's a reemergence of how energy is redefining the geopolitical axis. And we're situated here in the Arabian Gulf, which is the center of energy flows. And it's determining how investment is being implemented, the different types of investment, not only data centers, but infrastructure investment. It's informing and how relationships are enacted. So it's informing a lot of different matters. But at the end of the day, this all boils down to power and influence and how the world is being reshaped as a result of the changing dynamics of power and influence. So I often ask myself, in my world, how is it that I take advantage of some of these different dynamics? And in part, there are opportunities that arise from the fact that maybe there's a comparative advantage in a different region in the world. Perhaps what's happened most recently in the world with the redefining of global trade routes means that there's better opportunities to invest in Latin America or in sub-Saharan Africa. And the point of all of this is this is creating opportunities. We don't necessarily have to fear some of these changes. But more important than that is the key takeaway is we're not going to be able to predict these geopolitical events or these tectonic shifts in geopolitics. But what we need to do instead is to understand these structural forces behind it. I don't think any of us would have been able to predict the timing of the U.S.'s forceful removal of Maduro from Venezuela, nor could we have predicted exactly when Russia was going to invade Ukraine, what's going to happen in Iran, or when China might decide to change the relationship with Taiwan. The list goes on. But how this translates down into power and influence creates dispersions of opportunity. And one of the ways that I find it very useful to look at the world is in terms of spheres of influence. And by that, I mean you can look at the US from the perspective of it wanting to dominate the Western Hemisphere. Why? From a security perspective, and because it wants to control the resources in the region. You can look at Europe / maybe Russia as a sphere of influence, Asia, and the Middle East. And that just helps identify some of the opportunities. The next tool, though, that is very related to all of this is the powerful changes in technology, because it's shaping global economics and it's also shaping these dynamics of geopolitics. And we are living through one of the most intense investment cycles in history. The amount of capital being spent for AI rivals any investment trend that we've seen historically. But it's not just about AI. It's also about other types of technology. It's about biotech. It's about quantum, fusion. The list goes on. And this region is very relevant for all of that because these foundational technologies are going to shape productivity and competitiveness and national power. And we know that this region is incredibly relevant. And my colleague and friend, Mohammed, is always telling me that we have to emphasizing that at its core, that transformation, for this transformation to take place, we need energy, capital, and you need connectivity. And that's what's happening here in the GCC region. And technology is not standalone, but it's a driver of geopolitics more broadly. So let's go back to asset allocation and how to better define the opportunities in the context of this changed environment. So there's a broad opportunity set. It's not just public markets, it's not just emerging markets. What I do, it's private markets. And we're in the midst of, in spite of all these changes, a very healthy environment for attractive returns. And here's how I think about investing and identifying the opportunity and taking advantage of the dispersion. So we all like to think about total returns, and what I'm showing here all the way on the left is just the total returns over the past 27 years. So this is over major economic cycles in different regions, different parts of the globe, but it's public equity and public fixed income. What I find most useful is to think about risk-adjusted returns. It's just part of my DNA. And that's thinking about excess returns over volatility, again, over a period where there's significant changes taking place and a lot of volatility. And it might surprise a lot of people to see that, in fact, on a risk-adjusted basis, it's some of the fixed income markets, public fixed income markets, that have done quite well over this period. So let me bring this all together. Let me bring these themes together and as we connect the forces of growth, geopolitics, and technological change. And the message is clear that we're living through a period of intense transition in the global order. But it's not a crisis, it's not a collapse, it's a transition. And in that period and this uncertainty creates opportunity because there's differentiation. And the way to benefit from this, to profit from this, is to understand those changed patterns of structural growth and the structural forces that are behind it. We need to stay disciplined and position for the opportunities across different cycles and different regions. And the reason that I value the partnership with Camco and that we're lucky to have this strategic partnership is because it combines global insight with a deep regional presence. And I think that this will help investors navigate this new global order and look for opportunities to help manage risk and to stay disciplined. So thank you very much. Shukran.